In South Korean cryptocurrency exchange, Bithumb has admitted to a major operational error after accidentally distributing more
Imagine
than
you wake up as a normal
600,000
trader in
bitcoins to
South Korea.
customers.
You open your crypto app to check a tiny promotion worth maybe $1. Instead, you see a balance that turns you into a multi-millionaire on paper. Not because you bought the dip, not because you got early on some meme coin, but because your exchange just sent you thousands of bitcoins by mistake. That is exactly what happened on Bithumb, and it did not just change a few numbers on a screen. For a few wild minutes, it broke one of the biggest Bitcoin markets in the world and triggered a $40 billion question. How safe is your money when everything depends on one line of code? Here is what really went down. Bithumb is the second largest crypto exchange in South Korea. They were running a simple promotion called a random box event. The idea was basic. Give users around 2,000 Korean won, about $1.50, as a small gift inside the app. Instead, an internal configuration error told the system to credit Bitcoin, not won, and not 2,000 satoshis, 2,000 full Bitcoins. Some users opened their reward and suddenly saw balances worth more than $100 million in their account. They did nothing special. They just got lucky in the most expensive typo in crypto history. Now here is where it gets crazy. This was not real on-chain Bitcoin leaving the exchange. There were no giant withdrawals on the blockchain, no huge transaction IDs moving thousands of coins. On the Bitcoin network, nothing special happened. Inside Bithumb, however, the internal ledger said hundreds of users now held massive BTC balances. And inside that closed system, they were allowed to sell. So a wave of instant selling slammed into the Bithumb order book. People dumped the phantom coins. Market makers got hit with size they never expected. Liquidity vanished, and the price of Bitcoin on Bithumb crashed hard, while the rest of the world stayed almost normal. On global exchanges, Bitcoin was still trading around the mid-60,000 range. Inside Bithumb, the price briefly fell between 10 and almost 20% lower. Charts on the platform show prints down near 81 million won, and even reports of trades around $55,000. From the outside, it looked like a local market apocalypse. From the inside, it was what you could call a paper BTC shock. The numbers existed only in one database, but the damage to the local price was very real. Bithumb's systems flagged abnormal activity fast. Within around 35 minutes, the exchange froze trading and withdrawals for 695 affected accounts. Then the rollback began. By the next day, the company said it had recovered 99.7% of the 620,000 bitcoins that had been credited by mistake. On paper, they had given away more than $40 billion. In reality, the vast majority of that value never left their control. It was an internal bookkeeping disaster, not a hacker draining wallets. But that does not mean it was harmless. South Korean regulators did not laugh. The Financial Services Commission and the Financial Supervisory Service held an emergency meeting. Their statement was blunt. This incident exposed the vulnerabilities and risks of virtual asset markets. They announced reviews of Bithumb's internal controls and said they could launch on-site inspections of other exchanges as well. This is not just about one bad promotion. It is about how much we trust centralized exchanges to manage tens of billions in user funds without a single fat finger taking the system down. Bithumb rushed into damage control mode. The exchange issued an apology and insisted there was no hacking, no security breach, no theft of customer assets. They blamed a configuration mistake. The payout unit was set to Bitcoin instead of points or won. The CEO promised to cooperate fully with regulators. He said the company would treat this as a lesson, that they would focus on customer trust instead of just external growth. They even offered compensation, around 20,000 won for all users active at the time, and fee waivers and upgrades to their monitoring system, including new AI-based tools to detect abnormal transactions before they spiral out of control. But this story is bigger than one glitch. It raises a brutal question for everyone in crypto.